Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 21st of December 2020. And following on from US Congressional leaders agreeing a $900 billion stimulus package to be put forward for a vote today, gold zooms, albeit temporarily, above $1,900 and silver above $27. So let's take a look. After many months of wrangling, US lawmakers have agreed to an approximate $900 billion package of pandemic aid, including money for businesses and unemployment programs. The money is set to accompany a bigger $1.4 trillion spending bill to fund government operations over the next 9 months. Now, whilst this has been agreed, a vote is required today. Now, many COVID-19 relief programs were set to expire at the end of the month, and around 12 million Americans were at risk of losing access to unemployment benefits. This news, upon release, set gold and silver prices skyrocketing. In our weekly update published on Saturday, we pointed out that gold closed the week at $1,881. Now it is now, at the time of writing, $1,895, having touched 1907 already this morning. Similarly, and more impressively, silver, which closed last week at $25.82, is now $26.67, having spurted to $27.41. A huge positive reaction, particularly for silver, and something we stated was a possibility once the stimulus package was agreed. Now, although prices have fallen back as markets begin to digest the news, of course another spurt may occur once it finally clears Congress in a formal vote. Now, we also mentioned in our update that with this week being a relatively short trading week and some dealers having already packed up for Christmas, both good and bad news is likely to have a disproportionate effect on precious metal prices in either direction, depending on whether the news is good or bad. That said, even the dollar index has risen today to 90.5, up 0.5. And so it's even more impressive that we've seen gold and silver prices rise in spite of this. An additional point here is that there are two other major opportunities ahead to see precious metal prices rise. The first, under federal law, Congress must meet on January the 6th to open sealed certificates from each state that contain a record of their electoral votes. The votes are brought into the chamber in mahogany boxes. Bipartisan representatives of both chambers read the results out loud and do an official count. The President of the Senate, who is Vice President Mike Pence, presides over the session and declares the winner. Now, there is already pressure being placed by the Trump campaign to object to the existing votes and announce a new slate of electors in favor of Trump. Now, whilst this is unlikely to be successful, it is still nevertheless a potential hindrance against Biden being declared president. We've already stated that a Biden presidency is likely to be more positive for gold and silver, certainly short term, because of his tendency and that of his party to be willing to borrow more money and injecting more stimulus into the economy than the Republicans are likely to accept. And point two, the second is the actual inauguration itself on the 20th of January. Because once Biden is declared president, provided it does happen, of course, then market expectations will run rife, and we shall see once again further expectations of even more stimulus and state aid. Now we have, of course, to be mindful, though, that markets do predict events in advance, and we have to try and measure to what extent these events are already baked in. But for those of us who have political contacts and interests, and even those viewing with a mild interest in politics, will be aware that Congress was likely to agree a package before their holidays. Why? Because they always do. So to see the market reaction this morning suggests that precious metal price rises have not been baked in as yet, and already anticipated, in fact not anticipated, in the current figures. Now, in addition, offsetting the euphoria of an agreed package is, of course, further COVID-19 lockdowns, as, for example, implemented in the UK over the weekend, a complete lockdown in 2 of the nation's states, and a virtual lockdown in England as well, as a new strain of coronavirus has been detected, with up to a 70 times greater infection rate. And no doubt this too will have repercussions across other world economies, where many hospitals are now struggling once again to find enough beds and medical practitioners to deal with cases, let alone having enough medical personnel to actually provide the vaccine injections to the extent that is required across all nations. Now, we wanted to provide you with this early morning update, and also to remind listeners to please tune in to our weekly update that we provided on Saturday, and also the video we published yesterday, which was episode 3 of Bitcoin versus gold and silver. Now, those who do not like Bitcoin or the idea of Bitcoin, and we are perhaps in that camp, though we also appreciate that for some, certainly short term, it could very well prove to be a magnificent investment or speculation, depending which end of the scale one is coming from. But those who are negative Bitcoin will be pleased to see that we've covered a number of disadvantages of owning it or obtaining it. And we've provided links to both of those videos in the description box below. Now, just as a final note, as easily as prices have risen this morning, they could easily fall back, and may even fall below market opening. If this does occur, do not lose heart if you want price appreciation, because of the issues already mentioned. Our weekly update, which generally has been pretty accurate, will be further supported just after Christmas by our 2021 gold and silver price forecast. Now, whilst we're nowhere near as bullish as the vast majority of pumpers for sure, we do foresee gold and silver rising into 2021, and are very convinced that our long-term support levels of gold and silver, support levels at $1,700 and $20 respectively, will hold and probably will not be reached, certainly not this year or the early part of next year. The underlying and fundamental philosophy and view of this channel is that gold in particular, and more often, and silver to a lesser extent, are essentially inflation hedges. And we produced a few videos some months ago highlighting the correlation between these precious metals and inflation. And gold certainly came out on top in terms of being an inflation hedge on more frequent a basis. The excitement for silver, though, is that as well as undershooting, it also overshoots. And it's at this time, or that time, the brave who do sell will make profit, at least in fiat currency terms, with a view to buying back again later when that bubble bursts. Now, we've seen some dramatic rises in silver this year, but we haven't really seen it overshoot what one would perhaps expect to happen. And so there is still excitement in the precious metal to come. But please do not be fooled by the pumpers quoting you $200, $600, $1,000 silver and $5,000, $10,000 gold. Because if that were to happen, then it's the dollar collapse that will have caused it. Or certainly the dollar collapse would be in and on trend. But also at the same time, bear in mind, if that were to occur, then prices of all goods bought would be commensurately that much more expensive, and so $100 silver then will be no more valuable than $30 or $35 silver now. There is enough supply above ground and within the earth to ensure that these markets will remain within certain sensible parameters. The only exception and hope for many and desire one can perhaps keep one's fingers crossed for is that the paper markets overcorrect due to speculation driving prices much higher than they should be. And then perhaps utopia may be found for those following the bullish sentiment. Otherwise, our view is see gold and silver for what they are: protection against inflation and currency devaluation. That in itself is enough to justify their acquisition. And doing that, and maintaining that somber view, ensure that you cannot go far wrong. Thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.